Jason, as you've had a bit more time to look through these numbers, give me your take, number one, on compensation, and that coming down about 5% for Goldman.
Yeah, I think, it's similar to with JP Morgan's story. You see compensation coming down a little bit, frankly, lower than what the top end would have been expected to be. And I think you see Blankfein and Jamie Dimon both able to hold it in at a reasonable level because they know that there's a lot of regulatory pressure out there right now. There are a lot of eyes on what they're going to do from a compensation perspective. And so the numbers are lighter than what they could have been, certainly.
Jason, building on that, I mean, the big story with JP Morgan was setting aside less money for bad loans, which is something that helped their bottom line. And here you are with compensation, the key expense for Goldman Sachs, and putting aside less of that and maybe making them make this earnings number. That doesn't concern you?
I think you touched on it a little bit a few minutes ago, John. I think the big thing here is you've got the investment bank, the advisory side that really propped up the company, and you saw fixed income really a lot lighter. Now, JP Morgan saw fixed income numbers on the trading side a little bit lighter too. Citigroup's numbers were really weak there. Goldman certainly in the middle, but I think it was a little bit closer to JP Morgan. And so I'm not that concerned yet about it. I think overall you've got a good balance here of the advisory side being able to hold up the business in a period where fixed income trading is certainly a little bit soft.
Jason, what do you want to see more of at Goldman? What do you want to see more of from these numbers?
Well, I think that we're seeing just big market share shifts, and I want to see Goldman really hammering on that and trying to make sure that they're getting good relationships with the larger clients, so that as we see bigger M&A activity and we see volumes coming back to both the equity markets and fixed income, that they can put some more distance between them and their competitors. And right now, we're not seeing dilution coming in anymore. All the credit issues seem to be pushed through the larger financial institutions, and so they've got to use this as an opportunity to build the franchise so that they can do better going forward.
But Jason, do you think that in many ways that their hands are tied because of that very same regulatory overhang?
I don't think so, Betty. I think that they could really be aggressive right now, going out and trying to establish these relationships, trying to increase market share. I just know from managing our own brokerage commission process at Ariel that I think Goldman's one of the best on the street. Their service is very good. They focus on it very hard. They've got high quality people. This is one of those times, generationally, where things are going to be shaken up, and a lot of the CFOs across the world are going to be figuring out who's going to be their banker. And I'm hoping as a Goldman shareholder that they're taking advantage of this opportunity right now.
Jason, it's John again. Very quickly, what about the whole Facebook deal? Some highlighting the missteps perhaps in that one. This will be the first chance for a lot of people to ask about it. Do you think analysts are going to ask them about how that's all going to play out and what they expect to make dollar-wise from all this Facebook activity?
Yeah, it's a good question, John. And this is the first time that you're seeing a little bit of a distinction in Goldman's client base between the domestic versus the international and who's going to get access. One of the huge reasons that people do business with Goldman Sachs is that they like access to investment opportunities like this. And this is the first time that Goldman's, frankly, that I can remember, that Goldman's backing off a little bit and not providing that opportunity across its client base. So this is going to be an interesting to see how they handle this.
Almost like a test case, wouldn't you say, Jason?
Yeah, this is going to be one of those situations where, it's a test of how Goldman's going to handle the scrutiny. Traditionally, they've thrown some of the best lawyers in the country at situations like this to be able to prove that they can still give good opportunities to their client base. Now we're seeing in a very high-profile investment opportunity, not everybody's going to get access.
Jason, thank you so much. I appreciate you standing by and staying with us for this last half hour on the Goldman results. Jason Tyler of Ariel Investments.